Here's a side-by-side comparison of the most common loan programs that are out there, which is the conventional, FHA, VA, and USDA. The last three are basically part of government loans out there, where conventional is set up by Fannie Mae and Freddie Mac, which you may have heard. So here's what we'll start off with. We'll start with the conventional with a minimum credit score. Conventional does require a minimum of 620 FICO score, whereas FHA will go with a 580, same thing with VA. However, the USDA requires a little bit of a higher FICO at 640 for a minimum FICO score. Now, these do have varies in minimum down payment. So conventional, you can go as low as 3%. With FHA, it's 3.5%. VA, you can go 100% with this, as well as USDA. Now, they do have loan limits. The conventional is at $726,200. This is not the mistake for the high-cost counties where they have a high balance. They do have a slightly different guidelines in terms of this, but for side-by-side going on the base, conventional, FHA, VA, and USDA, this is what we're working with today. With FHA, it's $472.30. VA is at $726,200, and the USDA varies by county. There's no annual income limit for the conventional. Same thing with FHA as well as VA. However, USDA does require an annual income limit. And for 1 to 4 people living in the residence, they combined at $103,500. Whereas if you have 5 to 8 people living in there, it's $136,600 maximum income limit. Now, monthly mortgage insurance, it's only required on if you're greater than 80% on conventional. FHA always has mortgage insurance. However, VA does not carry any mortgage insurance, and USDA does carry mortgage insurance. Upfront mortgage insurance, there is nothing on conventional. FHA does require upfront mortgage insurance, and VA does. However, it does vary. There are times where it gets exempt. USDA also covers upfront mortgage insurance. Now, once we get into the derogatories, we have years since short sale or deed in lieu of foreclosure. Conventional requires a seasoning of 4 years from the time of your foreclosure, whereas FHA is a little bit more lenient at 3 years, and VA is at 2 years, and USDA is at 3 years. Now, foreclosure it has it's a little bit more restrictive, and conventional will require 7 years from the completion of your foreclosure, whereas FHA requires a minimum of 3 years. VA is at minimum 2 years, and the USA again is like FHA at 3 years. Now, when you go into BKs, Chapter 7, conventional requires a minimum of 4 years since it's been completed, the bankruptcy has been completed. FHA requires only 2 years, VA is at 2 years, and USDA is a little bit higher at 3 years. So it's kind of between FHA, VA, and conventional. Now, Chapter 13, it's at basically 2 years for conventional, FHA, VA. However, there is USDA does not have any seasoning requirements on this. If you guys got any more questions in regards to the various loan programs available out there, please feel free to reach out. We're here to help you guys out. This does not touch on your jumbo loans or your what we call your non-QM loans, which applies a whole variety of other loan programs out there. But these are the main out there that we probably see about 80-90% of our the loans being applied out there are what you're finding out there in the market here. Again, please reach out if you guys got any further questions about what loan works best for your needs.